Hello, hello, hello. Good morning, good afternoon, good evening. Because this is international, and my name is Marlon Smith, and welcome to the Real Money Coach. And so grateful that you're here. And I want you to go ahead. You can go ahead and type in the chat box, where are you watching from? Our purpose for this virtual town hall meeting entitled COVID-19, the Wall Street or stock market, and your money. And what we're going to be talking about is what are solutions? As you know, there's so much anxiety that's happening in this world right now, and things are turned upside down. I talked to one of my cousins over in Spain today, and I talked to a friend down in Georgia earlier today, and a friend over in California. And it's just amazing that all of this is really turning things upside down for all of us. And so there's a lot of questions, there's a lot of uncertainty, there's a lot of anxiety, even fear. And what we want to do tonight is just have a town hall conversation, a town hall meeting, where basically we share insights, we share strategies, we share solution and answers so that we can move forward with confidence and courage. I mean, isn't it true that, when it comes down to it, it's about each one, teach one, each one, reach one. And so thank you so much. I see, okay, we got some people in, all right. Look, oh, this is great. So grateful. Go ahead and type in the chat box where you're watching from. I see we got Charlotte in the house, okay? And, definitely would love for you to go ahead. If you want to do a watch party, please go ahead and do a watch party as well. Because one of the things that it's important is that we share information. And so tonight, it's going to fly by. We have 1 hour. We're going to really do our best to honor that. But if you have any questions, and you can, write down a question now if you like, what do you want to talk about while we're here? And this is great, man. We are rocking it. I'm so grateful all of you are on. And you can go ahead and just post any questions, any comments that you have. Again, my name is Marlon Smith. Very grateful to be here. I've invited some industry experts to share what's going on. Again, this is entitled COVID-19, the stock market, Wall Street, and your money. Because right now, as you know, there's a lot of anxiety. I don't know about you, but right now I'm at a stay-at-home order. Okay, I live in Charlotte, North Carolina, and I call it like a lockdown, right? I got my 2 little kids. I'm juggling between my job, my work, and as well as my children. And the beautiful thing about this is that I believe it's an opportunity for us to really get clarity on what is our purpose, what's the meaning of life. Because sometimes when you're moving so fast, you don't slow down. And I know all of us are at different places, but I want to encourage you to, take time to do some of those things that maybe you haven't done. I'm talking about if it's journaling, or if it's you really getting clarity on your budget, or, really getting clear on, your loved ones and letting them know you care. Because this is a time right now that we can use. We're all at home, so we can pick up the phone and call somebody, right? And so that's really what it's about. And so tonight, our purpose is to share insights, to share basically some solutions. And so again, this is going to be a dialogue. So if you have a question, you can post your question. You can let us know, what's going on in your life. Because again, we're here as a town hall meeting to share some information with you, as well as to encourage you and to empower you. So those are the 3 things that we're looking to do. And I would encourage you to go ahead and get your notepad, go ahead and get a pen, because you can jot down some questions, you can jot down some insights. It's going to be phenomenal. I promise you that. And so with that being shared, one of the things I want you to understand is that, with what's happened, COVID-19 has really kind of, if you would say, turn some things upside down. And so it's really an opportunity for us now to get some clarity as to, okay, why is this happening? What can we learn from it? And how can we be better as we grow through it? Are you with me? As we grow through it. So I would love for you to go ahead and, again, as you're typing answers, questions, I'd like for you to answer this question. How has COVID-19 impacted you? If you can type that in the chat box, would love to see, or what's the one word that you feel COVID-19 in our global society, what's the one word that's happening? Okay. And this is so good because, one of the things that I think will really inspire and empower us is to understand that, hey, it's all about us learning. And I see that we got Susan, and Susan said, hey, I love the links, the stimulus. Will you cover any of that loan information? Yeah, we're going to be talking about the stimulus package. Okay. And then, with the grants and the loans, you can go ahead, we'll give you our contact details because, again, there is a process, right? And, right now, what Susan's talking about is the fact that, wow, there are, grants and loans and so on and so forth. And so how do we make the most of that? How do we make the most of that? So Susan, feel free, to, take down this phone number or take down this email, info@therealmoneycoach.com. Again, I'll repeat that and we'll type it into the chat box as well. info@therealmoneycoach.com. Okay, because we've got a very tight schedule. We're going to be sharing, but again, you can post questions. And thank you so much. info@therealmoneycoach.com. So with that being shared, I want to get right into it because Susan really, really sparked a question that, man, okay, how do I move through this? How do I, grow through this? There's a lot going on. There's a lot of different information out there. So I wanted to bring on a gentleman who's really passionate about making a difference. And this is a man who I truly trust, somebody I respect, a man who's had 23 years of experience in financial services, and not just experience, but success in financial services. And so what's so amazing about this gentleman is he's been married 27 years. He'll be celebrating 28 years this year. He's got 4 kids and 3 grandchildren. And so when I'm about to bring him up, you're going to be like, he is too young to have some grandchildren and to be married 28 years. What? That's amazing. So here's what I'd like for you to do. Would you please put your hands together, get ready for my brother from another, Mr. Dr. Reverend Tony Jackson. Come on up.
Hey, Marlon. I was wondering who you were talking about there for a minute, man.
I know.
Oh, good. Yeah.
It is. And look, Tony, we're so excited to have you, man, because look, people are already posting questions. Someone says, do you recommend buying stocks now? If so, how does one buy? Interested in learning how to invest. So again, this is great because again, we're talking about resources. And I know, Tony, you're going to be hitting a lot of that tonight. And, go ahead and we'll put up our email address, so again, because everyone's unique. We're going to have hundreds, thousands of people watching this. And so we want to make sure that, we share information, but then we're willing to have a follow-up conversation with you, right? Complimentary, no obligation, but just to serve. Right now, we need to serve with information. So info@therealmoneycoach.com. So Tony, I'm going to turn it over to you, brother. Let's hear what you got to say, brother.
Hey, Marlon, thanks a lot. And you're right. It is a unique time in our economy. It's a unique time in life. I mean, man, just like I mentioned, heart really goes out to all the people who've lost loved ones due to the virus and all that. And so what we're going to talk about really tonight is the economic impact of all that. And, what was popped up in the Washington Post, they ran this ad. In the Washington Post, it says, the downturn exposes the reality of the U.S. economy, and that it was never really as strong as it seemed. And when we look at this dollar here, we see that it's fragmented. And what we found out is that our economy has been fragmented. There's some people who have done very well. There's some people who were doing okay. There's some people that were just really kind of surviving. And when you have a situation like we have now, what it does, it really exposes those fragments. And now, how do we pull this all together? How do we unite in one front? And how do we get information out that can really help people? And so what we're really going to talk about tonight is we're going to talk about it from really just an investment standpoint, retirement standpoint. We're going to really put the emphasis there. And then I think we'll come back next week and we'll even talk about some other things. But when we think about it, I really wanted to give an update of the CARES Act. The CARES Act was just signed into law just last week. And really, it has really 6 components to the CARES Act. The first is the financial assistance for companies in need. And that's really, we're talking about your major companies, your big companies, big business, states, municipalities, cities, governments, those types of things. And then there's economic support for small businesses. And that's really, we really encourage you to seek out some of those things. And perhaps even next week, we could come back in and really highlight, really hone in on some of those things. But definitely you want to reach out. We have some resources for you. If you email us at info@therealmoneycoach, we can get some of those resources to you, get some of those links to you, where maybe you can take advantage of some of those things in terms of the small business, economic support, small business, freelancers, independent contractors, those types of things. And then as part of this package, there's also various tax incentives. And we're really going to look at a few of those tonight as it relates to retirement, as it relates to, saving money and those type of things. And then they have the direct payment to taxpayers, the stimulus check. That's what everyone's talking about. They're talking about the $1,200 stimulus check that is available to taxpayers, and it's based on your income. So up to $75,000, and this can be on your 2019 return if it's been filed, or if it hasn't been filed yet, because we know that also was extended, it would be based on your 2018 return. And so for each adult, there's $1,200 of stimulus money. And then for each dependent child, there would be another $500 of stimulus money. Now, the important thing for a lot of people to realize too is that, again, that's only in the event that you have filed those tax returns, 2018 or 2019, because they'll be using your income off of those returns in order to determine how much you're going to get of that stimulus check. Now, one of the things to keep in mind is that at 75,000 to 100 or to 99,000, that money starts to phase out. So there'll be a sliding scale depending on your income. So for about every $1,000 over the 7,500, there's going to be a drop of about $100 off of that stimulus money, somewhere around then. So we just want to make sure that you understand that. Now, as far as there's been some confusion in terms of which people who are on Social Security that don't have to file a tax return. And it was determined that those folks who are receiving a Social Security check each month, they will receive the stimulus money as well automatically, even though they haven't filed for a tax return because they haven't needed to. And then it'll be direct deposit, just like your Social Security. If you're one of the few people that are still getting a paper check, then it's going to be mailed to you, and it's probably going to be there take a little bit longer to get there. And then the other part of it is the federal aid to hospitals and healthcare organizations. There's part of that stimulus that's going to that. And so altogether, when we look at all 6 phases of it, it's about a $2 trillion package. Now, one of the things that's very interesting, I think we have to keep this in mind, and I think it is something that we need to talk about even next week, is how are they going to pay for it? Most of the time when we have something like this going to affect, whether it's, the Healthcare Act or some other type of changes, there's always the revenue side. So where's the revenue going to come from to actually pay for this? And in this particular case, because of the urgency of it, the revenue side was never dealt with. And so at some point, I believe it's going to have some impact on us in terms of taxes and that type of thing. And so the question from Terry is, if I'm retired now, you can still get it, because again, if we're talking about the stimulus money, it is still going to be based on the tax return. It's going to be based on the tax return. So now let's look at it in terms of in retirement specifically. There's really some key points that I want to pull out. And number one is, right now, there's also an opportunity, and the opportunity is there where if you have a 401k or you have a retirement account, you can now get up to $100,000 and not pay the 10% penalty. So what happens is if you pull money out of your retirement account prior to being 59 and a half, you're going to pay ordinary taxes, and you're also going to pay a 10% penalty. Well, as part of the CARES Act, what they're doing is they're eliminating the 10% penalty up to $100,000. And so you can pull $100,000 out of your qualified retirement plan and not pay the penalty. Now, if you are currently working and you have a 401k or 457 plan, it's really up to your employer and the plan administrator how they want to administer that. But most of the time, that's going to be done as a loan. But also part of the CARES Act, it allows you to, instead of doing the max loan, which was $50,000, it now allows you to go up to $100,000 if you're going to borrow out of your 401k, 457 plan, retirement plan, those types of things. Now, the other interesting part of that is that when that occurs, it does not avoid the taxes. So you still have to report that money as far as ordinary income for your tax return. But the law does allow you to stretch out that tax liability over 3 years. So in essence, if you're a 22% tax bracket, you pull that money out, that $22,000 of taxes, you have over 3 years to actually pay for that. Now, so again, I think that's something that we really could drill down on maybe next week, talking about the tax implications of that, possibly talking about if this is a great time to do a rollover, because right now we have two really great things going on. Is you have taxes being low, and they're really low compared to what we've been. You avoid the tax penalty, and the fact that now if you roll out, you're buying at a low price because of the stock market. And so it's really a great time to maybe make some of those type of moves, converting to a Roth IRA, or maybe looking at some other tax-free retirement vehicles. Now, also as part of the CARES Act in terms of the effect on retirement is the RMDs, the required minimum distribution. If you are 72 or older for the year of 2020, you do not have to take your RMDs. You do not have to take your RMDs. And so that could help a lot of people in terms of not having to pull that money and use it, paying taxes on it and that type of thing. So there are some really good things in this act. Of course, the stimulus, of course, the help for small businesses, and also being able to access up to $100,000 of your qualified retirement money. So now it's a great time if you're in a position to take advantage of some of those things. So make sure, you reach out to someone, us or someone that you're working with, to look and see if any of those moves make sense for you, depending on where you are, how long you have to retire, and all those type of things. But they really have loosened up some of the rules to allow people to get access to their money because of the current economic situation.
Man, thank you, Tony. That's amazing. And we had a question, Tony, from Yvonne Adams Harris. She said, is the stimulus money based on individual or on a couple?
Okay, so as far as I know, it's based on your AGI, your adjusted gross income. And those figures, when we talk about the 75,000, that's for an individual. And if you look at a couple, those numbers are larger than that because they're bringing two of them together. I don't think it's quite a like 150,000. It's a little bit lower than that, but it is a higher amount for a couple. For that is for an individual, 75,000. Great question, though.
Yeah, thank you, Yvonne. That was awesome. And again, for anyone that has a question, just chat. You write it up in your chat box, or if you even want to give a comment, are you enjoying this? Because again, this is our first of a series, and we're really committed to sharing information. We've got some other industry experts that will be coming on. But I got a question, Tony. I mean, let's talk, okay? Can we talk? I mean, you know what I'm saying? I mean, listen, when it comes down to it, $2 trillion. I mean, just let that sink in, y'all, okay? $2 trillion. Because just in the United States, I mean, I'm not talking about other countries. And so this stimulus package, I mean, what happened, Tony? Why? What's going on? Talk to me, bro.
Yeah, how do we get here, right? What made this necessary? Well, really, when we look at our economy and we look at the stock market in particular, there's really two very main indices that we really take a look at, and those are the Dow Jones and the NASDAQ. Now, the Dow Jones, a lot of people don't realize that is the most common indice that we look at. It's one of the biggest economic indicators, not only for the United States, but worldwide. And it's really only 30 companies that make up that Dow Jones index. And what you see on your screen right now is really a 3 month a 3 month graph. And if we look at this closely, what we realize is that the 52-week high was just over 29,000, and where the market closed at yesterday was just under 21,000. And so from the high point that we had within the last year to where we were at the close of the market yesterday, we're down 29%. And again, this is a major indicator of the strength of what's going on in the economy. And we think about the Dow Jones has been around since 1860s, right? And it is the 30 largest publicly traded companies. You know, today we're thinking about companies like Apple and Boeing and Coca-Cola, Goldman Sachs, IBM, Microsoft, Nike, all those very big companies. The 30 largest companies make up the Dow Jones. But as they go, so goes the economy. And so when we see that we're at 29% down, that immediately kicked our government in saying we need to do something to kind of boost and stimulate the economy. And let's be honest, it wasn't just about getting the stimulus check, but it is about also getting these companies some relief. And so that's what the Dow Jones is all about. Now, the other one that we have is the NASDAQ. The NASDAQ is really about 3,500 companies that's traded on the NASDAQ. Again, we're looking at the graph for the same time period, the last 3 months. Really, we're talking about first quarter of 2020. Now, when you look at this, you realize that we were in the red before the whole coronas thing happened, right? This is January through March. So we were already in the red. But when we look at where we were a year from, you know, in the last 52 months, compared to where we closed yesterday, the NASDAQ is down by 25% also. And so you can say, well, the Dow Jones only represents 30 companies. Well, the NASDAQ represents like 3,500 companies. And so those are how many companies are actually traded on that market. But here again, we can see that this market has been going down, down, come up, it goes back down. It's really a roller coaster ride. But we've been in the red ever since January, coming out of 2018. And so when you get to this situation where we have COVID-19 hits, we were already on a downside. And now it really kind of catapulted us even further down. And so those two measures of our economy in the stock market are really things that to really be concerned about. Now, the other one I want to talk about, and it's one that we use in our industry a lot, financial services, is we look a lot at the S&P 500. Now, the S&P 500, just pull that up right there. The S&P 500 is the 500 largest publicly traded companies in the United States. All the ones I just forementioned, plus you throw in the others, the Bank of America, the Wells Fargo, and et cetera, et cetera. And as we can see, we go into the second quarter really on a low. And so again, diving a little bit deeper into the S&P 500, let's take a look at that. Here again, we're looking at the first quarter of 2020, right? And we see that we now, with what happened with the coronavirus and et cetera, we're now 27% under the high mark in the last year. And so when we look at these three indices together, the Dow Jones, the NASDAQ, and the S&P 500, and those are ones that are reported on the news. You can pull it up every day and see what's going on there. We can see that our economy, like the Wall Street talked about, probably excuse me, going into this situation probably wasn't as strong as we might have thought it was. But again, because we're riding high on gains over the past years, a lot of people really want to learn about it. But when you look at these and you look at the last 3 months of what's been going on, there certainly is an issue here.
Wow, thank you, Tony. People are, man, the thing is just blowing up, man. People are commenting and so I want you right now to type in the chat box, what are you feeling? You just saw, the Dow Jones, NASDAQ, S&P 500. What's one word you're feeling after what Tony just shared? Just type it in the chat box just so that, we just want to see some of the words, some of the emotions that you're feeling, the feelings. And again, it's no judgment, but I mean, look, I'll say I'm depressed. Right? I mean, I just saw, you're talking 27, 29, 24% decrease. I mean, we have somebody that said, Sunchen said, how do you rebound after you've taken such a hit? Right?
Yeah.
And so, I mean, this is real talk. And what I want us to understand, you can type in the chat box, how you feel, right? Okay, concern. Thank you. Thank you.
Hey, Marlon, thing though, as you type it in the chat box, this is family programming. So, it's PG rated, right?
Right. Good point. But how are you feeling right now? I mean, seriously, you could just type in very concerned. Thank you. Okay, keep it rolling because, again, we want you to understand you're not alone. See, there's power in unity. There's power when we take off the mask and we're real, we're transparent. And so I thank you for all these people that are sharing. Okay, makes me want to listen, learn more. Wow, love the info, the energy. Thank you. Amen. Thank you. I've really received that because we're coming from a state of abundance. Because I want you to understand, here's what I want you to understand. All things work for the good. Okay, I'm a man of faith, so I say all things work for the good of those that love the Lord and are called according to his purpose.
Amen.
And I just got to put that out there because, faith and fear can't operate at the same time. And one of the things I want you to understand, because there was an earlier question from, let me see, who was that? Andre Hill, who said, do you suggest buying, now? Right. And then somebody else is talking about, I just taken a hit. What do I do? Right. And so thank you for all this. Jay Maddox, apprehensive. Yeah. B Hudson, hopeful based on the conversation. Well, things are about to get better. Okay. And because I want you to understand early 2000s, right, Tony? Can we talk about it? Yeah. Early 2000s, right? We had the tech bubble, right? Mm-hmm. I'm from technology, right? Engineer by training, right? And it was just flying. Then all of a sudden, woo, right? And then we all remember 2008. Am I right? When the real estate market, it felt like, man, the world was just, collapsing, especially in the US. And so what I want you to understand, be encouraged. This too shall pass. And we will get through this. That's who I am. I believe, we're going to grow through this. So, but we have to be real. We can't be, looking at some weeds and talking about, oh, there's only roses. No, it is what it is. Right. But the thing is where do we go from here? We're going to learn information. We got a couple more experts we're going to be bringing on because we want you to understand this town hall meeting is really about you being inspired, but more importantly, receiving information so that you can make well-informed decisions for moving forward. So with that,
let's do this. Let's talk about it from a historical standpoint.
Okay.
I want to talk about it from a historical standpoint because the charts that I just showed were really the last 3 months. And the thing about it, they said you have to learn from your history or you're bound to repeat it, right? And so what I want to do is just really show this chart here from a historical perspective. And if we look at it closely, this is going from 1998 through 2019. Okay, so we're talking about a 20-year period of time. And as we know, in the early 2000s, the market was falling. You talk about that tech bubble. And here's the thing that's really pretty alarming about that is that it really took 24 months for us to hit the bottom. And so at the bottom of the 24 months, we were at 29%. We're already at 29% today, or as of yesterday, we were already at 29% of the Dow Jones. This happens to be the S&P 500, where we're 27% down as of yesterday. But in the early 2000s, it took 24 months before we got that low. And so this fall that we're experiencing is even steeper. Now, what's even more important is how long did it take to come out of it? And in this example that we're looking at, tracking the S&P 500, it actually took 8 years to get back to where it was when it started to decline. So it took 8 years. So we get to 2007 going into 2008. And if you were perfect in your timing, you put money in 1998 and you were perfect in your timing. We understand you can't time the market, but if you were perfect in your timing, you would have pulled out in 2008 before it crashed. But most of us don't know that. We can't time it that perfectly. So you see it peaked at the end of 2007, 2008, and then it fell again to 38% under where it was. And that happened in a matter of 12 months, 38%. And so now, I came through the early 2000s. It took me 8 years to get back to where I was. And then overnight, the real estate bubble burst, right? The mortgage bubble bust, right? And so now I lost 38% in a matter of 12 months. And then it took 5 years to get back to where I was. And so when we look at that in totality, in essence, if it would have taken us really 13 years to get back to where we were. Now, because the market's been booming over the last, 10 years or so, people forgot about the pain of the 2000 and the pain of 2008 until you bring it up, and then they remember it. But no, we usually don't look at it. It's like, how long did it really take me to recover? Now, I don't want to share this with you for you to be alarmed, but just informed. Because certainly if advisors, we used to tell people, buy and hold for 5 years, then buy and hold for 10 years, then buy and hold for 15 years. But so I don't want to say it in terms of making people alarmed about what's going on. But if you have money in that arena, if it's money that you don't need, or you don't mind waiting 8, 13 years, whatever that may be, then that's okay. There's nothing wrong with that. But if it's something that you need, you need it for your retirement, or you need it for something else, then you may want to just talk to someone, talk to an advisor, and just kind of talk your way through this. And the other thing that we can't time is not just the market, but we can't time life. So what I mean by that, and if we haven't known it before now, is that we're mortal, right? We're mortal beings. Sure. And, if you happen to pass, God calls you home at the bottom end of one of those downfalls, what does that mean? Or what does it mean if your retirement comes at the bottom of one of those? And all those types of things. But there's a lot of variables to look at. Don't be alarmed, but just be informed and talk to someone that can help.
I love that, Tony, because success leaves footprints, right? And what Tony's really saying is that, I believe is you focus on what you do the best and you let others do the rest. And so with that, Tony, there are some individuals that have hedged themselves from downside loss and they are rocking and rolling. And so let me ask you, what's a strategy? You've been in the financial services industry 23 years. Who are you modeling? What are you doing, right? To, not feel this pain that so many people have identified, in this chat.
Well, what I want to do is show you the most quoted man in investing, right? We all know him as Warren Buffett. Warren Buffett says this. He says the number one rule in money is to never lose money. And the number 2 rule is never forget rule number 1. Now, Warren Buffett coming into 2020 at $128 billion in cash. Okay, so he knows a little bit about money, right? And so how do we take this concept and make it live for people that we deal with every day? And how we do that is a concept we call indexing, fixed indexing, the power of indexing. And so now what you have on the screen is you have that same red line, same period of time from 1998 through 2019. Now the blue line is using the indexing concept. And we're going to actually bring on an expert who's going to explain exactly how the indexing works. But I'm just giving you an overview and letting you see right here what happens with the indexing in a real basic description is when the market goes up, you make money, but when the market goes down, you just move sideways. So you never lose your principal. You always keep your gains from the previous year, and then it just continues to move up. And so when we look at this and we're following the blue line, the market is going up in before 2000, but then the 3 down years of the 2000, those 24 months, you stayed exactly the same, right? And then when the market starts to go back up, you get to 2008 again. You've recovered. You're actually doing better than the market because you don't have to dig out of the hole. But then the market crashes in 2008. What happens? You stay the same. Now the market starts to go up again, and now your account goes up again. And so this just shows us, and you can see there's points in time where the gap between the blue line and the red line is pretty tremendous. And so that's a lot of ground to make up. And because the market has done so well going, from, coming out of 2008 and getting to 2013 and beyond, a lot of people forget that that could happen again. And so, but this ends in 2019. But that's the concept that we believe is important for the important money. If the money's not important, then, maybe this doesn't matter to you. But if the money is important, meaning that it's money that you have set aside for your retirement, or maybe it is money that you have set aside to leave as inheritance, or whatever the case may be, it may be a concept that you might want to consider for some of your money. Certainly, probably not all of it, but it certainly makes sense for some of your money.
Awesome. Thank you, Tony. I mean, one of the things, I'm just looking at this chat box, and I want to say thank you to everyone who's joining us in this conversation. And again, if you have questions or, thoughts or insights, share it, right? This is where we learn, we grow. I believe we're all in this together, right? Stay at home, or you want to call it lockdown, whatever you want to call it, right? But I love some of the comments. Evelyn was talking about, she's concerned personally and as a business owner. Shauna, hey. Okay, good to have you on, Shauna. And Alice Martin says, curiosity to see where this is leading us. I'm optimistic for the new things coming out of this. And then Tiffany Hill said, wow, this is a learning opportunity. I love the positive approach because, we have a choice. And thank you, Tiffany, because we can choose to be negative or we can choose to be positive. The choice is yours. It's not what happens on the outside of a man or a woman. It's more important what happens on the inside. You still have control. And Susan, thank you. Yeah, we're going to talk about, the loan program at the end, and again, info at therealmoneycoach.com for any other questions that we don't get answered tonight, because we want to be respectful of time. And this is just a series. This is just the beginning. Okay. So again, if you have some questions or you want some follow-up, I know many of you are talking about, hey, when do I invest? When do I do this? Please just send an email and we'll schedule a time when we can really go in and dive in, okay? But what I want to do right now, I want to bring up our next guest, a lady who's really on a mission, and I just love the energy of this lady. If you think I'm passionate and I'm optimistic, right, you're going to really love this young lady, because this lady is on a mission, and her company, JP Financial, is really doing some great things, JP Financial Group. Her name is Joyce Palmer, and she basically started her company in 2009. She's the managing partner of this financial services movement, really. I love to say it because I mean, she's got a team of committed advisors, wealth advisors, coaches, and so on and so forth. And so, yeah, Joyce, we're glad to have you on. How are you doing, Joyce?
I am doing great, Marlon. Thank
Oh,
you.
thank you. And
I
Joyce,
wasn't sure you were talking about me at first. I had to think about that.
oh, come on now. I know sometimes when you're reading, and look, I didn't even do your bio justice. I mean, you got so much going on, right? But I'm just grateful to have you on because you just are a phenomenal woman, a phenomenal leader, and as a managing partner and CEO of JP Financial Group, I would like to ask you this question. What are you telling your clients? I mean, you have clients, hundreds, if not thousands of clients, and what are you telling them? What's your response to them?
Well, the good news, Marlon, is I can comfortably talk to my clients right now because our philosophy and our planning process has been and always will continue to be an approach that uses some of the same strategies and points that Tony was mentioning, but
Mm,
it's a firm that focuses on um, always focusing on strategies and investments that offer moderate growth, um, principal protection, and most importantly, market downsize protection. So when the market is down, we're using products like those indexes. And like Tony mentioned, the index products allow you to be protected when the market is down. It also has another great feature. Index products allow you to lock in your gains. So not only do you protect yourself from the downside, but each year that you get a gain, you're able to lock that in. So that's another powerful piece of the indexing. So our clients also operate under a plan. I think that's probably the most critical piece is that
yeah.
you need to have a clear plan. It needs to be written. It needs to be
Mm,
customized. It needs to be unique to your goals, your limitations, the desires for your lifestyle. So if you're operating around that plan,
mm,
then all of this, as you say, shall pass because your plan is designed to address those what I call the biggest threats to your retirement. And there's 5 big threats. So your plan has to address that. And fortunately, the clients I work with, we've done that. We've done planning. So they can sleep at night right now.
wow. Thank you, Joyce. I mean, that's amazing. And so, in the chat box, my question to all of you listening and watching is, do you have a written plan? See, remember earlier I said success leaves footprints. And so here's a lady, Joyce Palmer, and she and her team are advising and helping, help families, secure their financial future, legacy wealth. And so one of the things that she said, you have to have a written plan, that's aligned with your goals. So please, in the chat box, and be honest, do you have a written plan for your financial goals? If you write in the chat box, either yes or no, okay, yes or no. And I just want to see what the consensus is. And again, there's no right or wrong. We just want to, again, just identify. Because again, one of the things we're going to be doing is a series of shows, and we can talk to you maybe at an upcoming show about, how do you develop your plan if that's something that is needed. So go ahead and write that in the chat box, please, either yes or no. And Tiffany has yes. Thank you, Tiffany. And please just write it down because again, there's no right or wrong. There's no judgment. But again, we want to serve. So Joyce, let me ask you this. One of the things we're talking about is the fact of, you talk about, your clients have goals, they're clear, they have a plan, they're sleeping better right now because they have a plan. And my question to you is, should people be trying to figure this out by themselves? I mean, what is your, what would be your, if I said, hey, Joyce, okay, I'm going to just figure this out. I'm going to do the research. I'm going to figure it out. What do you say to that, Joyce?
Absolutely not. I think more so than ever right now, this is a time not to try to go at it alone. We're in this together. And that's one of the advantages of leveraging like what we're doing right now, JP Financial Group partnering with the Money Coach, and partnering with you guys is so that we can leverage our experiences, our expertise, our concerns, our knowledge, so we can help each other. This is not a time to try to go at it alone. If nothing else, you need to have someone to sound some of your thoughts off. You need to have a second opinion, maybe. So without a doubt, I think the biggest advantage is right now is seeking out professional help, and using that to help you get to your goals, and to help kind of through this process, because it will be a process that we'll go through.
Wow. Thank you, Joyce. That's powerful. And I want to say thank you for your time. I know you've had a very busy day today. I'd like for you to stay on to the end so that we can bring up all of our experts and, maybe have a roundtable discussion. So thank you again.
Absolutely.
So was that helpful? Oh, you're welcome. Good. Again, I know we're throwing out a lot, and we're doing our best to educate, to empower, to inspire, and just to share information. Because when you have information, they say, information is power. No, it's really not. Information is potential power. It becomes power when you take action. And so the next gentleman I'm going to bring up is a man who, as Tony alluded to earlier, and I saw somebody earlier talking about, index products. That seems like that's the way to go, annuities. So we're going to talk a little bit about that, because when I first heard about this upside gain, no downside loss, I said, how can this be? Now, I don't know about you, but my dad used to say, anything that sounds too good probably is. But what I've come to realize when I did my research, because you always want to, you want to be educated. And, and it's all about, getting information and then you doing your due diligence. And so I did my due diligence. And what I came to find out is that a lot of wealthy families are using some of these strategies, and they've been using them to create legacy wealth. I mean, that's really what it comes down to. Remember, I said my premise is success leaves footprints. So you want to model people that have been successful. That's why when Tony, brought up Warren Buffett, they asked him, what's the number one rule to investing, Warren? He said, rule number one, don't lose your money. They said, oh, okay. What's rule number two? He said, see rule number one. And so the next gentleman I'm going to bring up is a man who's on a mission, just really has a big heart, wants to serve the world, because he understands that for too long, it's really been those in the inside circle that get the information, and they're the ones taking action. When other people, have, strong work ethics, striving for their families, but just don't have the right vehicle to get them where they want to go. And so this next gentleman is the national sales manager for a company called Anaco. And it's really phenomenal. His name is Michael Harden. And I'm very excited because he's going to really unpack for us, how does indexing work? How does it work? Remember the red line, blue line? The stock market was going up and down, and the blue was going up. And then when the stock market went down, it would just level off. So we're going to learn a little bit more about that. Welcome, Michael. How are you doing?
Hey, Marlon, I'm doing great. How are you tonight?
Wonderful, man. Glad you're here. And, again, when we saw the red line, blue line that, Tony shared, would love for you to just unpack it a little bit more, and so that we can get a working knowledge. And again, for those of you that are, having your notepad, like I've been taking notes, please get your pen ready. And there might be some questions that you want to ask. And again, we'll make sure we can connect you with Michael. We can connect you with Tony. But again, it's all about getting this information. And so I want to encourage you to get your pen out, because he's going to be talking. And I promise you, there's going to be questions that you're going to want to ask and you may forget. So that's why I encourage you to write it down. Because again, here's the thing. I just want to say this before Michael shares. We're very blessed. Hundreds of individuals on this, watching this. There's going to be, hundreds of more, if not thousands of more, watching the recording. But what I want you to understand is that for you to have access to this information, it's not just for you. It's not just for you. I believe each one teach one, each one reach one. So for you to be here, I want you to really dedicate your time to someone else. Dedicate it to at least 3 other loved ones, so that you take the information. And then when you take the information, boom, you then go share it with your loved ones, right? Because, we need to share information. Some people say, the gap is widening. The gap is widening. And I think a lot of times it's just because we're not sharing. We can all elevate. So that's what I wanted to share. And now let's bring back on Michael. And Michael, we'd love for you to give us an overview of indexing. How does it work? You know, what makes it so phenomenal, please?
Yeah. What makes it so phenomenal? And folks, again, Marlon, thanks for having me on tonight. Tony, thank you for having me on. Everyone, thanks for taking time to be here. These are crazy times that we are living in. And if you'd ever told me that when I got in this business that I would have lived through the .com crash, the mortgage crash, and now the coronavirus crash, I would have told you were crazy, because the market in this period of time has never done what we've seen. Right. And so, you know, when you go back to Tony's graph on indexing and you see that orange line and that blue line, man, that tells you a great story with what this is. And so let's get into awesome. Right there it is. Oh, wrong hand. Right there it is. So when you see that blue line, here's something that that Tony didn't tell you. If you did the math on the loss right now, if you look at his value of that orange line of 262,812 and do the math on that right now, the roughly, and I did 30% as I was sitting here listening to Tony and Marlon. If you do a 30% loss, which is roughly where we are, that person on that orange line has lost almost $79,000. They are now at a level that puts them back somewhere in 2015. They have lost 5 years of their investment life. And if they had had the blue line, they would still have their $262,000. Now, 268. Sorry, don't want to short of $6,000. So how does that work? Right. So let me talk to you about how this works. Right. These products that are indexed products are fixed products. They're not investments. You never, ever risk 1 penny of your money. What we do with these products is we use the performance of the S&P 500 index to determine the interest rate you earn on your money. Now, how does that work? So let me take you through it kind of step by step. Right. So whenever you make, and I may say the word investment with this, but this is not an investment. Right. So anytime you make a deposit in one of these index accounts, right, you can choose. You can choose one of two ways of earning interest on your money. You can choose that fixed account that you see on the screen. And currently that fixed account's paying a 4% interest rate. So I'm just turning it into dollars. I'm just turning it into $4,000 to make the discussion easy. So you could check that box and tell us you want us to pay you that amount of interest in the next 12 months. If you check the indexing box, the one that says annual point to point, if you check that box, now what you've told us is that I don't want the interest. I want the opportunity for the stock market to determine my interest rate. I want the opportunity to make more. And when you do that, we take the $4,000 that we would have given to you, we take that out to the stock market and we buy options on the S&P 500. Now, if you're sitting here and you're an everyday person like I am, you should be asking, okay, how does that work? What's an option? Why do I want to be involved in that? Well, let me show you that. Right. So when we go out to an option is a security that tracks the stock market. Right? That S&P 500 option is a security that makes money when the market goes up. Right? So let's do this scenario. Let's assume that last November, right, you made a deposit into your account, and we're going to lock in on the S&P 500. We're going to take that $4,000 out to the market, and we're going to buy that option. Right? Now, 1 year later, we track it for an entire year. You don't make money every day. You don't make money every month. We don't care what happens in between. We're going to watch it from November 1st of 2019 to November 1st of 2020. That's the only day that matters, right? And if the market is up, if the S&P 500 is up, we, American National, we sell that option because it's in the money. That's in bold black there for you to understand. It's called in the money. We take that, we sell it, and we give you the interest that is earned on that option. Now, if the market is down, then that option expires worthless. It's only worth money if the market's up. Now, here's how it works, why nobody loses money. Nobody loses money, especially American National and especially you, because we didn't take your principal, we didn't take the money you deposited into the account, we didn't take that and do anything with it. That money is still sitting back at American National. It's sitting in our general account. It's as safe as the day is long, so to speak, right? What we took is the interest we would have paid you. You said, I don't want it, right? And so when that happens, then that expires, like I said, that expires worthless. But did we lose any money? American National would have paid you interest. You said, I don't want it. Let's go try to make more. If we make more, fantastic. If we don't, then you didn't lose money. You just made zero interest for that year. You see it on the graph, right? So as we take this forward, let's look at a couple of the formulas that we can use to do this. There's a couple different ways we can do it, and a couple of them you really want to take, you really want to pay attention to and take advantage of. So the first formula for the indexing, right, is one that's with a cap. Go ahead and change that slide for me. There we go. All right. So one of the first ways you can do this is with what's called the value cap, right? That takes your same thing, November to November, and you make anything the market does from 0 all the way to 9.5%. One of the other options, which I'm going to talk about, well, I'll tell you about it now, is the uncapped option. And you really want to look at one of these uncapped options whenever you're in a market situation like we're in. The market recovers quickly from these, typically quickly from these things, right? It comes in little leaps, right? It may take it a few years, but it'll come up real fast and down and come up real fast and down, and you want to take advantage of that. And the uncapped option doesn't, well, it does what it says. It doesn't cap you. Right? If the market comes back next year and we come cruising back out of this, right, you're going to make the market's upside with that one. And just recently, the industry developed these strategies called multipliers. So they come with caps, but no matter where that cap stops the growth, then we take it, and you see on the screen there, we take it and we multiply it by 60%. And the entire time that you're doing this, you never, ever, under any circumstances, ever give a penny of this money back. Now, that's kind of how it works in philosophy. Let's take a look of how it actually works in practical application. We've got a slide next that will show you some of the indexing options. Bring that up there full screen, right? There we go. Awesome. Thanks. Now, if you look at the third column in, it says the S&P 500 return. And what this is the returns over the last 20 years. This counts all the losses and all the negatives in the S&P 500. If you look at that and track that all the way to the bottom, you're going to see over the last 20 years, the S&P 500 on an annual basis, on a calendar year basis, has averaged 4.02%. Interest rates have done that almost, right, with what we're doing. Now, as you look across that, let's just, and not to get into any one of them, but let's just take a look at the math on this. If you've got the 24% multiplier over that same 20-year period, it averaged 8. If you've got the strategy with the cap, it averaged 643. If you have the strategy with the uncapped, it averaged 693. And that's not fair to that one, because this past year, it did 24%. When the markets do great, look at the big numbers in that strategy. 21%, 18%, 24%, right? When the market does big numbers, that strategy captures the big number and it multiplies it on your money. and we spend money, we don't spend percentage. And then if you look at the very end, that strategy over the last 20 years has averaged 10.24%. Look at those. Now, the next slide that I have, just want you to see it in philosophy, right? Tony touched on this earlier. He showed you the downs and he showed you the ups in the markets and some of those things. Look at this. This is what the S&P, these are the bull markets for the S&P starting back, starting in 1950, coming through 2016. What if, can you imagine what your totals, what your portfolios would look like if you eliminated all the red on this slide? What if all your account ever saw was either zero right through the middle of that or green? Think about how much more money that you would have in your account if you eliminate the losses. If we listened to Warren Buffett and followed his #1 rule, never lose money, how much would you have? All right, so here's what we need to do today, folks. All right, today you've got an opportunity of a lifetime in this, right? If you believe in the U.S. economy, you believe in the U.S. Markets and so forth, right? Right now is the time for you to get in this at these low levels of what the markets are doing and be poised to capture that market upside with zero potential for loss. Zero potential for loss. That's what we need to do. That's what we need to do now with where you are. Those questions are coming in. As Marlon was reading them, I was watching them. You want to invest. People are asking, when do I invest? Do I buy stocks? Do I do this? Folks, let me tell you something about people. Let me tell you something that I've learned over the last 30 years. People are not investors. We get sold investing. We get sold that on the TV. Right? I've been home for 3 weeks now because we've been grounded. I can't travel and do the things I normally do. I've had the CNBCs or the MSNBCs on quite a lot when I've been here. I wanted to hear what they had to say, and they're selling you investing. That's not what people do. People like to save money. So what if you could have, right, the market upside and eliminate the market downside? What if you could not invest? I want to say invest though. What if you could invest your money today and never have an opportunity of losing anything? So what we need to do today is, now you need to scream this from the rooftops, right? You need to get out. You need to hear what Marlon and Tony have to say to you. You need to follow the rest of their Money Coach series, and you need to listen to what they're telling you. Because if you could have all the market upside and none of the market downside, why would you not want that to be part of your portfolio? Maybe you want it to be all of your portfolio, depending on who you are and where you are these days, right? You don't have to pick stock. You don't have to pick a mutual fund. You don't have to take a chance, right? There's no chance in this. So Tony, Marlon, I don't know who's up next. I'll turn it back over to you guys. Thank you very much for having me on here, and I hope that made some impact on some of the folks that were listening here tonight.
I think it did, Michael, and thank you. If you would definitely, stay with us, we're going to bring all of our guests up on the screen. One of the things that really touched me, that one part in particular, where he talked about the S&P, and I wrote it down, was 4.02%. Because of the negative, because of the losses. One of the things to understand, if you lose, your dollar, and the next thing you lose 50%, it's $50. Okay, and if you gain another 50%, right? Some people think, oh, I'll go back to 100. No, because if you check it out, $100, right? You lose 50%, right? $50. You can gain 50% on the $50, right? It's only $25. So now $75, 75, right? It goes up, but it doesn't go back to 100. You would need 100% return to recover from that loss. So that's why, it's almost like, what do you like to say, Tony? You like to say zero is your new
hero.
right. And so, what Michael's showing you, and he said it. I mean, would you like to be in an investment where upside gain and no downside loss? I mean,
No.
listen, what we presented tonight is just, again, information. And as Joyce said, go ahead and seek wise counsel. Go ahead and, put up on the screen, info@therealmoneycoach.com. Because again, we just want to share information, and thank you, B. Hudson. Yeah. Never lose. Wow. Right. That's why Joyce said, one of the things that I really got is that she said, I sit down with my clients, my team, and we develop a plan based on their goals. But she also said, we don't have all of our money in the stock market. Right. We look at other things. That's why a lot of her clients right now can sleep well, and I love what that person said. This is okay. Dr. Harris says, I'm interested, and so yes, info@therealmoneycoach.com, because here's what I want you to understand. One size doesn't fit all. So that's why you need to go ahead and schedule a time, send an email. It's complimentary. There's no obligation. But why not have somebody take a look at what you've got and what your goals are, right? And that's what we're striving to do. I mean, we've shared a lot about the whole, the stimulus package. We shared, what is up with the stock market, and the historical perspective. And then now we've shared a solution so that you can move forward with greater clarity and greater confidence. So I want to go ahead, as we're about to close up. If you want to type any question in the chat box, or even, share with us, was this worth your time? I'm so inspired, man. We've had, 35, 40 people, watching, and people are coming and going. I know, because you don't really get, with the attention span of most people, Michael and Joel and Tony. I mean, we're an hour in, and people are like, whoa, this is great. So thank you, Clint. That was helpful.
And one of the things I want to say, Marlon, is that we understand that the index products are not for everyone. It's not for everyone. And the other thing is, there's an array of fixed index products out there, depending on, and the questions always when we're talking about a person's money is, where did money come from? What do you want it to do? And when you want it to do it? And those are the questions that we need to really get to in order to say whether or not any of these products even make sense for you. And so it's been, I've heard Mike explain it over and over again, and it just really just is so clear at how this works and how it protects you as the customer, protects the company. It's really a win-win for everyone except for Wall Street.
That's good. So yeah, Michael, I mean,
Wall Street, IRS, they're not happy, but the rest of us, we're happy.
Yeah. So Michael, why are you so passionate about this? I mean, what do you have any stories of individuals that, I don't know, any personal stories? And then Tony, I'll ask you the same, and then we'll close out if there's any questions. And I want to first of all say thank you to all of our viewers. I mean, the comments, everyone's saying, wow, this was phenomenal. Very inspired, definitely worth the time. Please do it again. And we will. But again, I want to encourage everyone, take down that email, info@therealmoneycoach.com. And Tony Jackson or one of our other team members, will be there for you. And if you want Tony, and I know he's in hot demand, boom, we'll make it Tony. And again, it's all about sharing information, because at the end of the day, when you look at Maslow's hierarchy of needs, the first one is security. And I think that's what's happening right now. A lot of people's security is just being, it's being turned upside down, right? Most people, to be honest with you, you don't have a paycheck. How do you do this thing? You got a mortgage, you got rent, you got grocery bills. How do you do this? And so again, we're on a mission. And so Michael, I'd like to ask you, and then Tony, and then Joyce, is there any personal, can you share just a quick story of maybe a client or family or someone that that implemented this, and where are they now?
Well, I'll tell you, I want to go the opposite side of that. I came into the business. I came into this from a bank trust department. right? And so I came into the business as an investment person. I've had all the investment licenses throughout time and so forth. And I was doing my job down in Florida, late 90s, coming into that .com bust, right? And if anybody's here is old enough to remember, they were having monkeys throw darts at a board back then, right? And no matter what stock they hit, it would grow, right? So everybody was an expert. Everybody was making money. People were retiring early. People were doing things. And I'm at a seminar. Back then we didn't have to do it over online like this. We could do it in person. so and here's the part that changed me, right? I had folks come up to me holding their statements, their Merrill Lynch statements, their Smith Barney statements, their investment statements, and they were shaking and they were crying because their portfolios had lost so much money that they no longer could be retired. They were going back to work. They didn't know what to do. Right. And then secondly, again, I started out by saying, if you told me there'd been 3 of these, I would have told you were crazy. Right. And then I watched people fall in love with their properties and their mortgages and what they were making with that. And I saw the same thing happen.
Yeah.
People made millions, Marlon. They made more money than anybody should have, maybe, right? And you watched it disappear. It ruined people, right? And we don't know the end result of this. We don't know the end result of the coronavirus and what this is going to do to the economy and all the folks that are out there, just savers that are investing, right? You don't know. What I know and what I learned was that blue line never gives any of it back.
Wow.
If you can make, 6%, 7%, 8%, 3%, for crying out loud, if you make 3% instead of losing 3%, what does that do for your money? And I'm sold on it.
Thank you.
Maybe not for all your money, but for a good chunk of your money, you need to have this as part of your deal now.
Right. Diversification. Got it. Man, thank you, Michael. Tony, what about you, man? Anything that you want to share in closing?
Thing that I'm really, really happy about right now is that I've been making some phone calls and getting through.
And kind of speak up, Tony. You're a little bit.
I've been getting through some of the phone calls, some of the people that I've worked with, over the last couple of years, and giving them a call. And even though we don't have Major League Baseball right now, I said I'm like an umpire. I'm calling them safe, right? So they're coming around third base in the home plate. They're safe. And it is such a great, satisfying feeling to be able to call someone at a time like this and say, guess what? You did not lose any money. And they can sleep well at night. I can sleep well at night. And I was a mutual fund producer. I was in top 100 producers at one time. I mean, I get it. But when you can be safe and that anyone who's working with you is not losing any money. I mean, I can go to the grocery store if I could, and I can hold my head up high, knowing that I've done the right thing by people. And that's really what I'm enjoying. So, that's my story. I'm sticking to it.
Oh, that's awesome, man. Thank you, Tony. Joyce, or would you like to share anything? Closing insights.
I would go to the grocery store if I could. Hold my head up high, knowing that I did the right thing by people. That's really what I'm enjoying. So.
Okay, I think we can hear your audio. I think Joyce is even listening to it for herself. We're going to have you back on. You can go ahead and mute your phone, Joyce. We'll definitely have you back because people really enjoyed you. One of the things that Tony, can you talk to us about what's the next step? I mean, I see across the board on the bottom it says info at the Real Money Coach. What happens next?
Well, I think what's next is two things. One is if you're interested, it's just a matter of first having that initial conversation. What are your concerns? And just really listening to the people who want to get information, want to talk about it. Really, the first step is just gathering the information, gathering the feelings, gathering those thoughts, and then putting together a plan, that meets their needs and their timing and all those types of things. And so, but again, it just starts with gathering information. So that's one thing when we talk about on an individual level. The other thing is, I would really, like to hear from folks in terms of, do you want us to come back next week with this information? Because some of the things we weren't able to dig into deeply, because I mean, we're already, almost at an hour and 20 minutes, but, we can talk a little bit more about taxes. And I'm really concerned about the stimulus packet and the $2 trillion, because we're, as a nation, was already in debt. And somehow this is going to have to be paid for. I understand why we did it. I understand why we moved with the urgency we did. But what's going to happen to income tax rates down the road?
What I like to do for those of you listening, please go ahead and type in the chat box. What topics would you like to hear? Tony said, would you like to learn more about taxes? Please go ahead. You can go ahead and, type that in the chat box so that we can capture it while we're here. I want to, again, thank everybody. Everyone said they really enjoyed this. And, and I love, okay, Susan Flowers talks about, can you explain the difference between the two SBA loans for small businesses, disaster recovery, and the Paycheck Protection Program? Yeah, we can definitely, let's have a dialogue with that, Susan, because we're going to go ahead and wrap up now. You can send an email.
An expert that can actually delve into some of those things too. I got some people in mind that probably would be a good, resource for us. Not just from the standpoint of a lender, but people are actually living it and going through it right now and could share their, their experience and that type of thing. So we got some ideas there. And so we'd love to come back and do this again next week.
That sounds great. And again, please send us an email, even if you want to give us some topics, some questions that you would like for us to address at our upcoming, series. Let us know what you want. And then we can make sure that we design it with industry experts, that can talk to it. This is our first town hall meeting. And again, we want to say thank you. And really, wow, somebody said absolutely more about taxes and also about interest loans. Okay. If there's anything else, please go ahead and, send an email to info@therealmoneycoach.com. Well, look, I want to just say thank you. And, I like to just have the closing thoughts, and I want to thank our team, Chris Jackson for, just really rocking and rolling. This is a phenomenal technology, but please go ahead because we also wrote an ebook, and the ebook I think you would really enjoy. And so it's complimentary, but just go ahead, therealmoneycoach.com, and just say, hey, I'd like to get the ebook that you guys made reference to, because again, each one teach one, each one read one. And one of the things that, my father used to always say, readers are leaders and leaders are. And so we put together, we're on, streaming video, with this technology. It's very interactive. You guys are commenting, asking questions, sharing your feedback, but also it's nothing like also having that book, and that you being able to go through it and to highlight it and, and write in the margin. And so we would love to, give you that gift. It's an ebook that we have, and all you have to do is just send a request to info@therealmoneycoach.com, and we'll get that over to you. So in closing, I want to share this with you. Remember, there's greatness within you, and it's not what happens on the outside. More importantly, it's what happens on the inside. And one of the things that I want us all to understand and take grasp of, and just think about this. Have there been times in your life when your back was up against the wall, and maybe you didn't know how you were going to get through it? You didn't know what you were going to do, but one way or another, you got through it and you grew as a result of it. And what I want you to understand, regardless of where you are right now, we're hearing a lot of negativity. We're hearing a lot of, news, different reports. Remember this, you will grow through this. You have to keep the faith, because faith and fear can't operate at the same time. You got to decide. I get it. There's, all that negativity, all this uncertainty, all the anxiety, all the scarcity, all the fear. But you have to sometimes, you have to say, you know what? I'm walking by faith. I will get through this. And not only will I get through this, I will grow through this. Because I believe all things work for the good on some level, even though I may not understand. There's an opportunity for growth. And so with that, remember, a vision without action is just a dream. A lot of action without a vision is merely a passing of time. But a vision with action can change the world. I am Marlon Smith, reminding you this within you. On behalf of the Real Money Coach, Tony Jackson, Michael Harden, Joyce Palmer, Chris Jackson, and myself, we say thank you. Because time is our most precious commodity. And I'm grateful that we had the opportunity to connect with you. And let us stay in touch so that we continue to grow. Remember, your success is your choice. Stay blessed.